So, in a way of introduction, Laura and I will be co-hosting this webinar. Laura is a Chief Marketing Officer for Avitas, and we're very thankful for her background. She is a co-founder of the company. I think you've been around a couple of decades, maybe, family owned. And
Yes, for sure. So Avitas is a marketing agency, full service marketing agency right here in Houston and serving the oil and gas industry and particularly technology companies in the oil and gas industry. And we've been doing this since 2004. So quite a while in
wow.
this industry.
Excellent. You've seen a lot. Thank you, Laura. So we're going to work together to listen to your questions. So we do encourage you to upload your questions as we go through our webinar talk here. And we want to emphasize this is a fireside chat, so we want the questions to continue on. And so Laura's going to be looking at those. My name is Michael Edwards. I'll be your moderator today. I'm also the program chair for the management technical section. I am also an executive senior advisor with Partners in Performance, which has been acquired by Accenture as of late last year. So we're proud to be part of one of the largest employers in the world. I also want to thank on the next slide the program committee, Laura, of course, Shawan, um, and Ellen, who have a lot of energy for our program. It would not be possible without this committee. This is a new committee, so we're stretching between experienced to young professionals in the Eastern and Western Hemisphere. So you're very interested in what we have in our content to inform or also support. We're looking for new members. So just reach out to us on LinkedIn. So we have five pillars, what we also call as our taxonomy that underpin our management technical section that goes from our asset portfolio management, risk management, decision making, all the way to professional training and education. What you're going to see with our talk today with John is that we're going to touch upon a number of these pillars. Particularly around energy economics, strategic planning, even our risk management and decision making. So you're going to see a bit of that. So that's what we are supporting as a technical section. Thank you.
Like there's 68 of us, including ourselves.
Okay, excellent. That gives me a good view here. Without further ado, welcome, John. We're very pleased to have you. Um, like I said, you're very busy, so getting things on your calendar is a big part of that. I know that you're a managing director of Accenture, and you have been with Accenture nearly 35 years. Can you talk to us a little bit about your background? Um,
Yeah, sure, Mark. Thank you so very much. Unfortunately, it's almost 40 years. If that's not too embarrassing to even say. If you could pick up the accent, I was born in Australia, but I've worked all over for the world for the firm. I've pretty much served the energy industry for most of that time. I've had the honour to look after our energy, chemicals, natural resources, and utilities business in Europe, the Middle East, Russia, the former Soviet Union, Africa and Latin America for 5 years. I ran our consulting business for resources, which are those industries globally for the firm. I did 5 years out of Houston, a year and a half right out of Moscow. And I'm most recently based in Dhahran in Saudi Arabia. And it's pretty easy to know the client that I look after for on behalf of the firm if I'm based in Dhahran. But I really look after the industry globally for us. And as part of that, I get to do fantastic things like be at CERAWeek, right, be at WPC, which is most recently in Calgary. But even more importantly than that, I get to convene a thing called Accenture's Global Energy Board, which is chaired by Bob Dudley, the former CEO of BP and the chair, of course, of the Oil and Gas Climate Initiative. I mention that for two reasons. One, we were just together in Houston last week, and just to give you a bit of a sense of who's represented there. All of the big companies, right? Exxon, Chevron, Shell, BP, Total, as well as the more regional players, right? I can't really call Saudi Aramco a regional player. I wouldn't have thought, Michael, that would be insulting, right? But, Saudi Aramco, ADNOC, Petronas, Petrobras, and all of the independents in North America tend to have representatives on the Global Energy Board. Needless to say, we were together to talk about a lot of what we will discuss in this webinar today, just literally last week. But we also held a Global Energy Board in December in London, and the focus of the Global Energy Board at that time was gas and the importance of gas in the future energy system. And I guess we'll be talking a little bit about that and LNG today. So that's fantastic. I would just like to say before I finish and hand back to you for maybe the first question is, I could not I could not say how important this is, partly because I think young professionals in our industry, right, are clearly the future. And everything the SPE is doing really to support the development of the young professionals is super, super important. It's very near and dear to my heart. I obviously saw Schwann's name on the slide previously, Michael, and I'm so glad that he has joined you in that capacity. We supported the youth chapter at WPC in Calgary. Energy Asia is coming up in June. They will have a big focus on youth at Energy Asia, and we're going to be very heavily involved in that as well. And as really just borrowing from WPC, I've actually stood up a youth program within the firm, which is mostly about getting our young professionals to network with the young professionals in the industry in the hope of continuing to develop their skills, etc. So a big thanks to you and to Laura for the efforts that you're leading for and on behalf of the industry. And again, super excited to be with you today. And I can't thank you so much.
John, we can't say enough about the young professionals. I think we're just scratching the surface. Listening to their views, very, very important to how we're positioning, our firms, the way in which we're even looking at our industry. So yes, I feel the same. I'm so glad that you brought that up, and I'm so glad that your leadership is enabling the young professionals as well. Just to remind others that why we're here today is to talk about the global natural gas market and to hear insights from John. We'll tap on some, global macro trends. We'll talk about the shifting of the energy markets and how we're adapting to conditions today. How we're evolving to meet these local and national demands, not just at a global level, but how we're going to also talk about successful companies and how they can position themselves to enable local and regional gas demands while growing their value chain across the natural gas value chain, that is. And then, innovation does have a role to play, and innovation such as AI, how do they help us enable this growing market? So I think that just to set the scene, um, I think it would be very appropriate for us to talk about the market as a whole. That is oil and gas primarily. John, you're coming out of all these OPEC meetings. We did hear and we did anticipate additional barrels coming onto the market. I know we talked about that as well, but it has been officiated that OPEC will be putting barrels on in June 1st. I think it's 400,000 barrels that they're expecting. Where do you see the impact of that, John?
Yeah, so I think that there are three big factors, right, going on in the industry at the moment. Probably the one you mentioned first, Michael, is the first and most important, right? What is really a material change in the OPEC production and pricing strategy. They had obviously been, curtailing production up until the end of December of last year, and they've been slowly reintroducing barrels to the market. But that has really accelerated, right? First of all in May, and then a promise to accelerate further in June. And people are expecting that will continue, right, for certainly, let's call it the summer. And then I think we'll see where we stand. I think, so you mentioned the 400,000 barrels. Obviously, the immediate impact in that has been the drop in crude prices, right? Crude dropped below $60 a barrel, which I think was a bit of a surprise for some. probably not for those in the OPEC cartel. But this is really about, trying to get, I think, reassert control, right, over production levels and in pricing, right, but also to encourage more discipline within the OPEC members. That's the first thing I think that's going on. The second, of course, you would not be surprised at all. We need to mention the impact of tariffs, right, and the shift in trade policy coming from the US. And I think tariff-related cost pressure is increasingly across, the energy value chain. Prices in, a lot of the steel, tubular areas are up 10 to 20%. LNG projects are facing 3 to 16, 15% capital, right, cost increases. These disruptions are prompting reassessments, I think, in the near-term capital deployment, right? But again, a lot of our clients, I think, are reacting, or a lot of the industry is reacting, right, with a focus on resilience. And we're going to hear that a few times, during this webinar, if that's okay with you, because I think resilience is, demonstrating itself as a new competitive advantage, right, as we go through some of these, some of these changing macroeconomic impacts. The last thing I would just mention in this, overarching thing is obviously the concern about weakening demand, weakening both oil and gas demand,
Right.
Globally, and the impact that's going to have in terms of both price, right, but also volume, in the market. So you get three things there. You get the OPEC plus, change, right? You get, the tariff and the change in US, trade policies, and then ultimately what's going to happen, what's the knock-on effect that's going to be to demand. As you just mentioned on the whole tariff thing, obviously the cost inflation, right, affects different players in different ways. We were just with some of the onshore producers in the Permian, right, who were saying actually their exposure is relatively limited, really limited to just the steel, right, they're using, but very little impact on their frac crews and some of those other things. So I think it's probably likely to impact the industry, unevenly, right, depending on where you are in the world, and it'd be very much depending on, what it is that you're about, conventional, unconventional, or otherwise, but we can talk about that some more as we go through the webinar.
Yeah, I know this is kind of interesting times. We're riding the roller coaster again, it seems. I've been 35 years in the industry as well, so I think you're a bit senior than I, but it's really interesting. It'd be good to get your insights on IEA, but before we do that, Laura, if you could do me a favor and upload for the audience the report that was issued on trade and tariff impacts. And I just wanted to reemphasize what John had mentioned about resilience. I think that's a very good report having to do with the four major pillars and areas of resilience that we see as focus. I think it's people, the company business, technology, and I'm probably missing one off the top of my head. So that's a pretty good report. We'd like others to see. If you don't have that, I can get the link to you soon.
I was going to say, I don't think I'm copied on that. I'm not finding it.
Okay, no problem.
Yep.
I'll
Sorry
upload
about
it.
that.
No problem. John, if you can give us a little bit about your views about the IEA projections on growth. And I suspect that this is mainly around oil. And so we'll pivot to what the impacts of that means on reinvesting in the gas infrastructure and what that means for the gas market.
Yes, yes. So I think that the first thing I would say, overall, Michael, is that the kind of prediction that the age of fossil fuels being over, right, was relatively overhyped, and I think what we're coming back to, right, is a bit more of a sort of normalized view of where we are and what's required to fuel the energy system, both in the short term, right, but also, in the long term. I think it was a very different tone set at CERAWeek, right, in March of this year versus the tone set in CERAWeek of the year before. And so I think people are recognizing that while, renewables and other dimensions of the energy system will continue to grow, right, and outgrow oil and gas, right, overall, they will continue to be an important dimension, right, of the overall energy system, but that oil and gas in particular, and we'll come on to talk about that more in terms of the expected growth in gas and particularly LNG in the energy system, right, over the short to medium term, right. I think, again, a view that, that in no way has peaked, and we have now. The reality is in the short term, some of the factors that we mentioned earlier are going to have a dampening effect, right, on that growth, right? But growth there will definitely be over the short to medium term. So I think, the IEA plays a very, very important part, as you know, right, in taking all of those macro factors and looking forward, to what we can expect. Suffice to say, some headwinds in the short term, right? But, we need to continue, right, to provide safe, reliable, right, and affordable energy, right, that the world has come to expect and will need into the future.
Exactly. And that was a really good lead in to natural gas being a reliable source and a base load, what we also often call as a base load, and enabling for transition and other sources. So we'll get into that whole ecosystem. Um, but let's talk a bit about the impacts of the decline in oil, in oil, and how that will actually impact the stability of investing in our gas infrastructure in particular. So that's the market turbulence that we're seeing, the uncertainty about reinvestment.
Yes, I mean, there is no question that, there are probably three things or maybe four things that I'll mention, right, just in terms of, balancing that long-term investment with the short-term risk. But before going there, and this is something that is doing the rounds in the public domain, so I would encourage us to distribute it after, right, the webinar today. But the thing that's really, really, got a hold of the industry is a letter by the CEO of Diamondback, right, to his shareholders, right, and I thought it was a fantastic read. And I've just got three quotes that I had from the CEO's letter that I thought the audience would appreciate. So the first, it was just related to the headwinds that he sees. He said it is likely that US onshore oil production has peaked and will begin to decline this quarter based on the drop in oil price below $60 a barrel. The second he comes on to talk about was in terms of 2025 guidance. Put simply, we would prefer to use the incremental dollar generated to repurchase shares and pay down debt over drilling and completing wells at these prices today. And then thirdly, he used a driving analogy. We are taking our foot off the accelerator as we approach a red light. If the light turns green before we get to the stoplight, we will hit the gas again, right? But we are also prepared to brake if needed. I thought that summed up the situation that we're in absolutely brilliantly, because of course, oil price matters, right? And, the industry, right, is expected to exhibit discipline, right, over the short to medium term, right, and focus on shareholder returns. So the first point I make really is around this capital discipline point, right? It remains extremely critical, right, during this volatility, right? It's a top priority for, all of the industry, right? And you just heard what the Diamondback CEO had to say, about that. Consistency in investment strategy, I think is also super, super important. And the narrative, right, remains paramount. You can hear it in the words that he chose to use. And obviously his investor letter is much longer than I've represented here. And I've just given us a few, snippets from that. But what, certainly the publicly listed companies are expecting, or the shareholders of the publicly listed companies, right, is to see that capital discipline, that consistency in investment strategy, right, and the narrative, right, over the long term. And all that really comes down to this point around resilience, and also our ability in many ways to focus on shareholder returns, over the cycle. And I think the combination of that capital discipline, right, that, consistency in investment strategy, right, the resilience point, makes it super, super important. On the point of resilience, one of the things that we're obviously coming to realize is the importance of technology, and AI in particular, right, in helping drive, companies towards that point of resiliency. And again, I mentioned right at the very beginning here how we're seeing resiliency, right, as a potential competitive advantage, right, as we consider the volatility that's in the market, and how we go forward, et cetera. So, again, very, very much this is all about, that point of being consistent, being disciplined, right, and building resilience in the business, over the medium to short term. Maybe, sorry, medium to short to medium term.
I knew what you meant, John. Hey, I'm thinking about, capital discipline. I appreciate you raising that. I think back in the days where, we're in the field, we're trying to squeeze out as much as we can out of whether it's a barrel, TCF, whatever we're, producing at a minimal cost. But I also think about the big infrastructure projects and as it relates to gas infrastructure. Do you think that we're a bit overexposed on our LNG projects today? Do you think that is at risk to some extent?
Yeah, so no, a great
Mhm.
question, and yeah, very interestingly, a question that was raised first of all in December at the GEB in London, but repeated this time around because a lot of people are trying to get a sense of, where they are, what does it look like. A sort, I guess, an industry analyst that I was speaking to recently, who you might conclude, given the number of LNG projects that are going at the moment, the number of gas projects going in the world, right, that we might be overshooting, right, in terms of supply. He was quite, realistic, saying that, look, just because we have a lot of projects, in consideration, right, first of all, it doesn't mean all of those projects will come online. Second of all, his view was that of the projects that are currently in development, many of those will experience delays. And so, we can take a very straight line view of this, right, and come to the conclusion that we're going to get out of balance and we're going to be oversupplied. He said, natural forces will probably, correct that over time. I made the point the time before coming to this call, just to look at the top 5 projects in the world, and then you and I talked about Woodside as another one to add here. But the expansion that's going on in Qatar is one, right,
Mhm.
where they're going to effectively by 2025. Right, increase the country's export capacity to over 110 million tons per year. Right, that sounds an awful lot of doubling their overall capacity through from where they are today, but again, I kind of feel like there's demand for that in the world. You've got others that are going on in Southeast Asia, right? The next generation LNG facility in North America, right? The Arctic LNG in Eurasia, right? The new LNG terminal in Western Europe. But I think in balance, right? I am not at all pessimistic about where we are, nor where we're going to finish up in all of this.
Yeah, it does sound like a nice balancing act. And, we do think long term. We think about these infrastructure projects in decades. So let me just pause here and see, Laura, if we have any questions from the audience yet.
We have a couple. Um, so first of all, shout out to Schwan. He has been sending the links to the items that you guys are referencing so I can put them in the chat and not have to go look for them and not pay attention during the conversation. So thanks for that, Schwan. And someone asked here, how low does the Henry Hub price have to go in 2026 for US natural gas production to not increase?
I don't. Oh, I don't
I think
know,
it's a
Michael. Have you got a view on that? I could get out my crystal ball, but I'm not quite sure. I could hope to get it right. Maybe Michael, you got a view?
Michael, you're on mute.
I think every company is different. I think every region, every basin's different. I immediately think right here in Texas, the Permian Basin, they did cautious generally, the Chevrons, the ConocoPhillips, and others, that if it's below 60, it could be an issue. But, a lot of these major companies can weather the storm. So, it's hard to put it on a price, but So with regards to reinvestment, I think is our major concern is where are we going to allocate our capital? So, capital expenditure is pretty steady, but you can imagine yourself if you're a CEO of one of these companies and you're making a decision on where to spend your capital. Are you going to put it in a major infrastructure project in LNG? Are you going to put some capital into some of the basins to increase production, or some other interesting areas, maybe renewables even. Um, so yeah, hopefully that answered
I,
your question. But yes,
I do think it's quite important actually, because again, like you and I talked about, and I said I would bring up Woodside here. At the end of April, they just got their final approval, right, for their $17.5 billion investment in Louisiana, and that's the first big project to be sanctioned right under the new U.S. administration, and I think that bodes well, right, for investment. How quickly, right, they go from here, to production, I think is yet to be seen. But I think it's a sign of, positivity in terms of how they see the outlook.
that is very positive, John. I see that as probably an example of some of the major projects that you have worked on and you're looking at and talking to executive teams of these companies where they've already made a commitment in LNG. So let's kind of step back here, if you don't mind, and let's talk a little bit about the overall gas market. I think we did caution the fact that there will be some questions around how we allocate capital into major infrastructure projects. I think we've got that kind of theme. Encourage others to continue with the questions. But where do we see the natural gas playing a crucial role? I want to give a little bit of context here. With the IEA supply shock in 2022 and 2023, and natural gas moved towards a gradual rebalancing in 2024. We were looking at gas demand reaching a new level high just last year, with about three-quarters of our growth being around emerging and developing markets. Gas increased around 2.7%. And this is pretty big, around 11 BCMs equivalent last year. So that kind of sets a little bit of stream. Do we see ourselves at the new level? Do we see it increasing? Do we see a kind of rebalancing happening? But give you some idea. We grew in the pandemic and the energy crisis around 1% in around 19 to 23. But over a 10-year period from 2010, it was around 2% per year. So yeah, we reached almost 3% last year alone. So that's pretty interesting. Where do you see the gas market going, John? Interested in your insights here.
Yes, totally. So first of all, I think, what is very, I think, in some ways, if you're in the industry, quite
Mhm.
obvious, right? But even from the outside, it's starting to become, more noticeable. Gas is going to play as an incredibly important role, right, in, the path to net zero, in the path to the energy system, of the future. Whether you like to call it the transition fuel, or you've got a different set of terminology that you prefer, there is no question, in my view, the people that I talk to in the industry all see gas having a very, very important role, right, today, but also into the future. Now, as to the exact growth associated with that, I would rather allow the experts to name that for sure. What I would like to say, though, is that a lot of the conversation, you saw it first at CERAWeek, it's been a lot of conversations I've had recently, right, is this uptake in power generation, right, as a result of the needs of artificial intelligence. And as that gains traction, so does the need for power. And the easiest way to get power online, is actually with gas. And so I think that whatever we see today is going to be accentuated by this, rush to, to get a competitive advantage in the race for AI dominance. You can already see that happening in the US, but a lot of the hyperscalers who are building out this infrastructure, whether you mention Microsoft, Google, AWS, right, or other, they start from the point of view that they want to have net zero power. Now, that zero power can come in many different forms, right? And of course, the first place they look to is renewables. I just don't think we're going to get the renewables on stream, right, fast enough. And a lot of what's going on now is that, a lot of these hyperscalers are starting to build data centers, close to gas pipelines, right, where they can actually bring on gas-fired distribution. That's not just happening in the US, but happening, more broadly. I mentioned already that I'm in Saudi Arabia today. Google has committed to build 10 AI data centers in a place called Spark City, which is literally 45 minutes from where I am today. Land provided by Aramco, power provided by Aramco, right? Guess what? Mostly going to be gas fired. So I think that whatever view you have of gas as you see it today, and gas growth, right, as you might expect it, I think the really, really new news is going to be this whole, AI, push, right, and what that means for power generation and what's the energy of choice, right, to bring that power online.
John, thank you for that. We like to remind, others that, the reliability base load. We use the word base load here as something that we can grow upon. Infrastructure being very established here, where you can build upon interesting microgrids that with the data centers. A lot of good opportunities to integrate the entire mix. So
I think we're going to see more of that, Michael, if I'm honest, not less. Again, I was talking to, somebody who plays a big role in sort of energy policy in the US, been talking to a state governor. The problem that the state governor had is that if you like, the rated utility couldn't bring the power on fast enough, right, and get the returns they need for, a regulated business. So they were thinking about how do we get the hyperscalers themselves to invest in power infrastructure, right, to support what they need, right, to make sure that they, stay in the race as far as this is concerned. Now, I don't know whether that was an anecdotal statement, whether that was a real consideration for the governor, right, or what that might mean, right? But, certainly it's a conversation that is happening, right, in the US and elsewhere around the world.
well, it is becoming evident that the data center growth is making some interesting disruptions in how that we bring power via natural gas and power generation that way. Let's think about access to natural gas. So I think that's what, when we think about the LNG terminals, making sure that we have consistency, affordable and reliable access to natural gas. Can you talk to us a bit about, kind of mapping the world? We talked a bit about the LNG expansion in the Middle East. I think we also talked a little bit about South Asia in working with the floating storage regasification unit there. Any thoughts around that? We also talked about in North America. I think there's some other parts of Europe we haven't covered as well.
Yeah. So I think one of the things that I would say immediately is that, what you're seeing is, a change in some of the trade flows here. There's almost been no US LNG, landed in China, right? In the last few years, it was already dipping, right, in the early months of the year. My understanding is in April, there was no landed LNG, in China at all. The LNG from the US is mostly going to Europe, right? And, China is getting more of their LNG from Australia and to Qatar in the first instance, right? But places like Australia and and otherwise. So that is going to change the dynamics in the industry, right? In terms of where people are looking to get their gas from into the future, right? And also what it means in terms of the infrastructure they need to build out, right? To be able to afford themselves. You mentioned Europe, and the big question, of course, is if we get to the point of normalizing relations with Russia, right? Does Russian pipe gas ever come back to Europe or not? There's a faction that would say yes and yes immediately, right? But there are other people who are much more cautious about that. And of course, what Europe recognizes is that they were too dependent, right? On one source for their gas. And I don't ever think we'll return to, that environment, certainly in our lifetime. Now, what's the balance of that, over time until we get to this point of normalization? I don't think we know. But certainly we haven't seen the gas shortages we might have seen in Europe for two reasons, really. One is relatively mild winters, but secondly, the ability to get, LNG landed into important parts of Europe. And of course, that meant a big change in terms of regulation, permitting, and their ability to, build out some of this regas, capability. If you go then to Southeast Asia, where I think is a super interesting thing, well beyond China. India again is super important as far as this is concerned, right? And is up there as part of the fastest growing economies in the world. Very dependent on gas imports, certainly in the short term. So that's going to be interesting to see it play out. And then you go to Southeast Asia, where you have a very similar dynamic going on. Japan and Korea, right, have been big importers, will continue to be big importers. And so, again, while these trade shifts will mean that people will be getting their gas from different parts of the world, I think that what there will need to be, right, continuing to build out. I'm very excited about the export facilities that are starting to open up again, right, on the Gulf Coast. We just mentioned the Woodside facility here, which was on the back of the purchase of Tellurian. I happen to know the Tellurian chairman quite well. And, while I think he would prefer not to have sold to Woodside, he's super excited that Woodside have committed to, to that gas project as a consequence. And so, yeah, lots to play for, really.
Thank you very much, John. I am real excited about the modernization of India and what that actually is bringing to the integration of all the pieces that we talked about, the data centers, the microgrid strategy, where gas comes in, the infrastructure building. I think we've covered a lot here. Laura, any questions from the audience? I think this may be a good time for us to take them.
Yes, we have about a dozen questions, and there's no way we're going to get through them all. So if you've submitted a question and we don't get to it, my apologies. We just are a little short on time for all these. But let me just pick a couple. I'm going to go kind of in reverse order in our conversation. Here's a great one. As the energy sector evolves rapidly, particularly with the rise of AI and digital technologies, what leadership capabilities do you believe are most critical for navigating this change, and how should organizations approach upskilling to ensure their workforce is ready?
Fantastic question, and you wouldn't be at all surprised, Laura, to know that it's a question I get almost every day. And of course, reskilling of the workforce or upskilling of the workforce, whichever expression you prefer, is going to be super, super important. And this isn't just a white collar thing. This is a white collar thing. This is a frontline thing. Every part of the organization is going to need to gear up. Some of the initial applications of AI we've seen, have been in the headquarters, right? Whether that be around, some optimization, right, etc. But increasingly, what we're describing as industrial AI is where the future is. I think that's where we're going to see a huge amount of value, whether that's in asset maintenance and reliability, whether that's in areas of corrosion, whether that's going to be in, accelerating capital projects into the future. And it won't be something that you can outsource. Now, a lot of people worry about, their role in all of that. And I think that the idea that it's a future of the machines, right, I think is a little bit, too far-fetched. I think an augmented future, right, where you have the human worker alongside and augmented by AI, I think is more likely to be where we finish up. We talk a lot more now about agentic AI, where we put agents to work, right, to actually, complete work. There are a lot of people starting to talk about autonomous, operations, but we've been talking about autonomous operations for multiple decades. If you've been in the industry, long enough, what that there's resulted in is sometimes you might get an offshore facility that is, largely autonomous, but it's controlled by a human manned, control center sitting onshore. But what's very, very important in all of this is that, upskilling the workforce to be able to work in an AI-enabled future, right, is going to be critical for the industry that we love and serve as much as many of the other industries that that certainly the Accenture family get involved in. So, hopefully that goes part way to answer the question, Laura.
Very good answer. Yes. Michael, you want me to go ahead and take another one, or do you have another topic to cover?
Continue.
So here's another interesting one. In terms of private equity and sovereign wealth funds, how are they influencing the pace and direction of gas investments globally?
Yes. Okay. So that's super interesting in my view. I think private equity is coming more and more, into the energy industry. There are lots of private equity funds that are being set up specifically to target the energy industry, and I think that has got to be a healthy thing for certain. I think that sovereign wealth funds, less directly, right, in my experience of them. It's more the private equity people that are coming to the fore. And you see, a number of private equity in the UK. So as the UK, what I would call typical majors divested some of their maturing fields, right, a lot of private equity came in to pick up a lot of late life fields, do a particular roll up. Harbour Energy is a product of that. Neptune Energy is a product of that in the UK as well. And so I think, again, that's been very, very positive for the industry overall. I don't think that's limited, Laura, to the oil side of the industry at all. I think that's equally applicable, in the gas side. And I think that we probably will see acceleration of that, over the medium term. What it means in the short term, given the volatility, I don't know, right? They tend to like to get involved where, they can have a more, stable cash flow, right? That they can, obviously, operate against. They probably need to work out how they're going to do that over the cycle. But private equity is definitely coming a little bit less clear on the sovereign wealth funds.
Interesting. All right. Good observations there. Here's another one. With the withdrawal of Western know-how from Russia, is there any risk to Russia LNG supply and its ability to maintain its LNG facilities for future production?
Yeah, great question. I think there's, it's not a very happy time for Russia, and their oil and gas sector overall, because, as you know, it's impossible for, whether you're in the oilfield services side of the business, right, or otherwise, to be directly deploying capability and capital into the Russian oil and gas industry. So they are really starved, not just of, it's got the money side of things, but also the capability side of things. And for a long time, the capability side of things mattered more, in Russia. As I said earlier in the webcast, I had the good fortune to live in Russia just as Russia was really opening up. It was a very exciting time to be there. The future looked incredibly bright for the industry. As I said, I now worry about whether gas will ever return to Europe, right, and exactly what it's going to mean in terms of, LNG, specifically. Now, they are developing, right, LNG facilities as we speak. So I just mentioned the top 5 earlier, and one of those was a project that's being done in Russia right now. But now, I think some investment will continue, right? I don't think that given how important, energy in all of its forms is both to the Russian domestic economy, but also to its international income, I think they're going to find ways to get after this, but not in the way you might have thought, back in the early 2000s or otherwise. So, yeah, probably going to be a very, very difficult time for them.
Interesting. Okay. Moving south a little bit, what is your take on how Africa is positioning itself to be a hub for investment?
Right, I think in many ways we more and more we talk about the global south. Now, lots of people think the global south is about Asia. Well, actually, in lots of instances, particularly from my vantage point here in the Middle East, the global south looks a lot more like Africa. And if there's energy poverty anywhere left in the world, Laura, right, the worst of that, right, is absolutely in Africa. And so what we do there, and you can see this in terms of things like telecommunications infrastructure. We all started by laying down fixed lines. That's how we first got, our telecommunications to work. Well, they've skipped a generation, and all of that now in Africa is largely mobile, and so they're going to skip a generation in terms of their energy, right, infrastructure as well. And you see a lot of people looking to them thinking, well, how do we solve this? I was at a conference here, right, in Riyadh not too long ago, very focused on how do we supply the global south, Africa in particular, right, for the energy they're going to need to lift them out of poverty. I think it remains a big issue for the world, right, and for those people who, still are energy poor, which is why I remain convinced that we need probably all of the forms of energy, right, to continue for the overall economic growth of the world, but particularly in places like Africa, Southeast Asia, and the global south.
Very good. Let's see here. Continuing on our geographic theme, how do you see geopolitical shifts like the evolving China-Middle East energy corridor reshaping global gas trade routes over the next decade?
Yeah, so I think we talked a little bit about this already. And I do think that, some of those geopolitical tensions are going to, mean that the origins of LNG in the world, right, are going to wind up in different places based on, some of those, changing trade flows. We've already started to see the beginnings of that. I mentioned in terms of US LNG landed into China. It's very difficult to predict where this ends, right? But I think, what we hope for, is a system, an oil and gas system that allows the right molecules to finish up in the right place, right, with the right politics behind it. And I think, that's going to continue to be an important factor here, and an interesting dynamic in the industry, both short term, right, but probably medium to long term as well.
Okay, very good. So next question, what are the risks associated with the existing long-term contracts and PPAs associated with the gas market, considering the current disintegrated gas markets against a possible unified gas market?
Yeah, great. Yeah, fantastic question as well. I think that, the reality was that you wouldn't develop a gas project unless you had long-term contracts, right? And that really has been the mainstay of the industry, certainly, right, as gas, and liquefied gas, right, has really come to the market. That's changing a little bit. I wouldn't say it's changing dramatically at the moment, right? But it is becoming, more possible, to buy on spot, etc. There's also the decoupling of the gas price, right, from oil price in a lot of these, long-term contracts. And so I think it will change. I think it's changing, and I think it will continue to change, over the short to medium term. As to risk, right, I think there's always risk in the system, and it's just about how you mitigate and manage, against that. And this is where a lot of the big trading houses really come into the fore. Now I say big trading houses, and of course, Shell is the biggest LNG trader in the world. So it's not about the Glencores, the Mercurias, the Vitols of the world, right? It is actually some of the big integrated energy companies that are, big traders, not just in oil, but increasingly in gas and power, right? For that matter. And, that's where I think some of the risk, right, will be mitigated, right? Certainly that's the impression I get, when talking to those people in that kind of trading dimension or in the trading part of the value chain. So.
Very good. Let me see what else here. All right, what is the impact of tariffs on the LNG project construction cost in the US?
Yeah, so I think again, this is going to, vary a little bit depending on, your where your source of materials is coming from. We already talked about when I was referencing the Permian earlier, and one of the executives I talked to, right, who has a big play in the Permian, and their exposure was relatively limited because the only, export commodity that they were really exposed to, was steel and piping, right? The rest of it was relatively domestic. So, there's no simple answer to this. It really comes down to where you're sourcing, your raw materials from, right? And where you're sourcing, your different forms of, I guess really it's more raw materials than anything else, right, in the construction, dimension of this. And so again, I think we will, see how that evolves. The reality, of course, as we've seen, tariffs go up and tariffs go down. I don't know where tariffs land right at the end of the day. And again, what I would say at the most recent Global Energy Board, one of the things that I think the full group concluded was that the one thing that cannot happen is people panic. Right, so do not react to short-term, right, talk of, this tariff versus that tariff, but rather, continue to be disciplined. Back to some of the question that, Michael asked me earlier, Laura, which was, stay disciplined, stick to your long-term strategy, right? Don't panic, right? Build resilience, right? These are the things that are going to be super, super important and critical as we go forward. If the project suddenly doesn't make sense anymore, people will pause projects. That's what they will do. That's what was in the CEO's letter from Diamondback, right? We're not going to keep drilling, right, if the price is wrong. And I think if we're going to see a bunch of cost inflation, then people are going to, slow down this development. It's why I said at the very beginning, right, of the webinar, the reality is we could easily convince ourselves that we're going to be in an oversupplied situation in LNG. I just don't think that that's going to happen. Now, we may see some volatility, we may see some blips along the way, but if some of these projects are delayed, some of these projects have, problems in their development, I'm not so sure it's, the worst scenarios, right, are going to come to be true.
Agree, for sure. Well, I'm aware we have now just hit 10 o'clock. So, Michael, if you would like to wrap up, so we end on time and are respectful of John's time, that might be a good time to do that.
Thank you very much, Laura. It's always a pleasure. I just want to reemphasize, sticking to the plan and building resilience. I think that was a great closing, and we really appreciate you taking the time today, John. This was a lot of fun.
Very good, Michael. Laura, thank you so much for the invitation. It was wonderful to be here. I'm super excited about what you're doing. I think, the more we can, provide, support to our young professionals in the industry, right, maybe even the older professionals in the industry for that matter, I think what you're doing is absolutely fantastic. And thank you again for having me.